All right, good morning, everyone, and welcome to today's PCAOB open meeting. I want to welcome all of you who have joined us today, especially people on webcast who are viewing us remotely. Before we proceed with the agenda, I will note for the record that all board members are present, save Mr. Kaiser, who is on the phone with us. Can you hear us, Jim?
Yes, Bill, I can
Okay,
hear you.
excellent, thank you. All right, the first order of business before the board today is a staff recommendation that the board adopt a new standard to enhance the requirements that apply when auditing accounting estimates, including fair value measurements. The second order of business before the board today is a staff recommendation that the board adopt amendments to auditing standards that apply when auditors use the work of specialists in an audit. To present the recommendations, I will turn to our acting chief auditor, Barbara Vanich, and her team. Over to you, Barbara.
Good morning, Chairman Dunkey and board members Ham, Brown, Kaiser, and Disparte. I am pleased to recommend today that the board adopt amendments to its standards in two important areas. First, auditing accounting estimates, including fair value measurements, and second, the auditor's use of the work of specialists. The first rulemaking would update and strengthen the requirements for auditing accounting estimates and auditing fair value measurements. We'll refer to both of these today as estimates. Accounting estimates are pervasive in financial statements of both large and small companies. By their nature, estimates often involve subjective and complex judgments, making them susceptible to both error and bias. Thus, in many audits, present a heightened risk of material misstatement and demand a critical evaluation of both positive and negative evidence obtained and appropriate application of professional skepticism. Auditing accounting estimates has proven to be challenging for auditors, as inspection results indicate. The requirements in this rulemaking should prompt auditors to be more diligent and skeptical as they face those challenges, which we believe will improve audit quality in this important area. The second rulemaking would strengthen and enhance the board's standards regarding the auditor's use of the work of non-accountant specialists. As estimates have increased in financial reporting, so has the use of specialists. Today, companies and auditors use a variety of specialists, including, among others, valuation specialists, reserve engineers, and actuaries. If the work of a company specialist is not appropriately evaluated, or the work of an auditor specialist is not appropriately overseen, there is a risk that a material misstatement could go undetected in an audit. The rulemaking on using the work of specialists would require more auditor involvement in evaluating the work of company specialists, particularly in higher risk areas, and also would provide better direction on supervision of the auditor specialists. These two rulemakings were developed in tandem so that the related requirements can work together. For example, when using the work of a specialist in auditing an accounting estimate. Before turning to the project teams to present the rulemakings, I would like to acknowledge some people within the PCAOB who played key roles in developing these proposals. First, I would like to express my appreciation to the Office of the Chief Auditor staff on these two projects. Keith Wilson, who led both projects, Dominika Taraskevich, Nikki Adesoye, and Karen Wiedemann on the estimates team, and Lisa Calandrello, Ahmed Salmanoff, and David Hardison on the specialist team. I would also like to thank our colleagues from other divisions for their significant contributions, in particular Andre Spinelli, June Suk Lee, and Rashawn Inget in the Center for Economic Analysis, John Cook and Jennifer Williams in the Office of General Counsel, and our colleagues in Inspection and Enforcement. Finally, I would like to thank the staff of the Securities and Exchange Commission for their support and timely assistance with the project. Now Dominika will briefly discuss the new estimate standard and amendments.
Thank you, Barb. The estimates rulemaking before the board today consists of a new standard, auditing accounting estimates including fair value measurements, and amendments to existing PCAOB standards that clarify the auditor's responsibilities in specific areas related to auditing accounting estimates. The rulemaking carries forward many of the key aspects described in the 2017 proposal. First, it replaces three existing overlapping standards developed over the years with a single standard that streamlines and strengthens the direction to auditors in this important area. Second, it builds on and enhances the requirements for the three existing approaches to auditing estimates that auditors are familiar with: testing the company's process, developing an independent expectation, and evaluating evidence from subsequent events and transactions. Third, The new standard and related amendments focus auditors on estimates with greater risk of material misstatement and emphasize the application of professional skepticism in this area, including addressing potential management bias. Lastly, the new standard includes an appendix that provides specific requirements and direction to address auditing the fair value of financial instruments, particularly when pricing information is obtained from third parties, such as pricing services and brokers and dealers. The new estimates standard and related amendments are supported by extensive outreach to investors, auditors, preparers, audit committee members, and others through discussion with the board's standing advisory group, including the Pricing Sources Task Force, a 2014 staff consultation paper, and the 2017 proposal issued by the board. Both the staff consultation paper and the proposal elicited significant public comment, and we have considered all comments and suggestions received. The staff has also worked closely with our Office of Economic and Risk Analysis to integrate economic analysis into this rulemaking. In consideration of the comments received on the 2017 proposal, the requirements of the new standard and related amendments were modified in several respects, including revising the objective of the standard to describe the overall purpose of the procedures required by the new standard, clarifying the auditor's responsibilities for identifying significant assumptions, providing additional direction on the auditor's ability to group financial instruments with similar characteristics when applying substantive procedures to pricing information obtained from third parties, and retaining, as an appendix to the evidence standard, existing requirements for evaluating audit evidence when the valuation of investments is based on investee financial results. In closing, the staff recommends that the board adopt a new standard, auditing accounting estimates including fair value measurements, and related amendments to PCAOB auditing standards in substantially the form presented. We also recommend the board authorize the staff to submit the new standard and related amendments to the Securities and Exchange Commission pursuant to Section 107 of the Sarbanes-Oxley Act, and to also request that the SEC approve the application of the new standard and related amendments to the audits of emerging growth companies pursuant to Section 103 of that Act. I will now turn it over to Lisa to discuss the rulemaking on specialists.
Thanks, Dominica. The amendments on the auditor's use of the work of specialists are intended to enhance investor protection by strengthening the requirements for evaluating the work of a company specialist and applying a common supervisory approach to both auditor-employed and auditor-engaged specialists. These amendments, which are designed to be risk-based and scalable, should lead to more uniformly rigorous practices among audit firms of all sizes and enhance audit quality and the credibility of information provided in financial statements. The final amendments add an appendix to the audit evidence standard, setting forth requirements for evaluating the work of the company specialist. This includes requiring auditors to evaluate the data, significant assumptions, and methods used by the company specialist. Under the amendments, the required audit effort will be based on 4 factors: the risk of material misstatement, the significance of the specialist work to the auditor's conclusion, the professional qualifications of the specialist, and the susceptibility of the specialist to company influence. The final amendments also add an appendix to the standard on supervision of the audit engagement, providing direction on how to apply the existing supervisory principles to the supervision of auditor-employed specialists. Lastly, the final amendments replace the existing standard for using the work of specialists with new requirements for using the work of auditor-engaged specialists, which are largely parallel to the requirements for supervising auditor-employed specialists, but are tailored in certain areas, such as evaluating the engaged specialist qualifications. Like the new standard on auditing estimates, these amendments are supported by substantial outreach, including public comment and discussions with both the PCAOB's Standing Advisory Group and Investor Advisory Group. The staff has taken into consideration all commenters' views and suggestions. The staff has also worked closely with our Office of Economic and Risk Analysis to integrate economic analysis into this rulemaking. In consideration of the comments received on the 2017 proposal, the final amendments reflect a number of clarifications and revisions to address certain proposed requirements that may have been perceived as unnecessarily complex, burdensome, or prescriptive. For example, with respect to the use of the company specialist, The revisions include removing the word test from the requirements to evaluate the work of a company's specialist, except in relation to company-produced data, and reframing the requirements for evaluating data, significant assumptions, and methods used by the specialist to describe the key considerations in making those evaluations. With respect to the use of the auditor specialist, the final amendments have been revised to allow auditors to assess the auditor-engaged specialist's level of objectivity along a spectrum, and to use the work of a less objective specialist if the auditor performs additional procedures to evaluate that specialist's work. Mr. Chairman and board members, the staff recommends that the board adopt amendments to PCAOB auditing standards relating to the auditor's use of the work of specialists in substantially the form presented. We also recommend that the board authorize the staff to submit the amendments to the auditing standards to the Securities and Exchange Commission for approval pursuant to Section 107 of the Sarbanes-Oxley Act, and to also request that the SEC approve the application of the amendments to the auditing standards to the audits of emerging growth companies pursuant to Section 103 of the Act. This concludes our prepared remarks. We will be happy to answer any questions you might have. Thank you.
Thank you all very much. We'll turn to board member statements, and then we'll move for adoption. I'll begin. After joining the PCAOB earlier this year, we wanted to take adequate time to understand the objectives of these proposals and determine whether and how the proposals would support those objectives. Following careful study, I'm pleased that we are able to move these two projects forward today. Determining whether to begin a new standard-setting project or advance an existing one should rest on two principles. First, what problem within our jurisdiction needs to be addressed, and is standard setting the appropriate means by which to address it? Second, is the proposed standard appropriately tailored? In other words, based on available evidence, do the benefits of the proposal outweigh our understanding of its costs? These two proposals, in my judgment, meet the threshold requirements. Between 1988 and 2003, the auditing profession adopted three different standards relating to auditing accounting estimates. Although these three standards use a common approach for substantive testing of estimates, they vary in their level of detail in describing the auditor's responsibilities. The result was inconsistency in the auditing of estimates. The three standards also predate the board's risk assessment standards and therefore do not fully integrate requirements relating to identifying, assessing, and responding to risks of material misstatement in accounting estimates. The objective of this proposal is to adopt a single standard for auditing all accounting estimates that articulates a clearer, more consistent, and risk-based approach. Based on the evidence available at present, the proposed standard thoughtfully addresses known concerns and is well-tailored to address the significant and challenging audit area. The new standard is risk-based and scalable. It neither prescribes detailed procedures for the auditor to perform, nor the extent of those procedures in each circumstance. Rather, it requires that the auditor respond to assessed risks and provides direction for testing estimates based on those risks. The new standard builds on our existing risk assessment requirements and focuses the auditor's efforts on those estimates with greater risk of material misstatement. We are adopting this proposal only after substantial outreach, including 2 rounds of public comment. Commenters generally supported the objective of improving the quality of audits involving estimates and suggested areas where the proposed requirements could be modified or clarified. After careful and deliberate consideration of the comments received, we have made responsive changes to address commenters' concerns with certain aspects of the proposals. Let me turn now to the auditor's use of the work of specialists. As accounting estimates have become more prevalent and significant, auditors' use of the work of specialists also continues to increase in frequency and significance. Auditors tend to encounter specialists acting in 2 capacities. First, they may consider the work of specialists engaged by or employed by the financial statement preparer. Auditors will often use the work of such company specialists as audit evidence in evaluating management's estimates. Second, auditors may use the work of their own employed or engaged specialists to assist them in evaluating significant accounts and disclosures, including accounting estimates in those accounts and disclosures. The role of specialists, whether auditor, employed, or engaged specialists, or company specialists, it is often critical to ensure high-quality financial reporting. When an auditor does not appropriately oversee or evaluate the work of a specialist, there may be a heightened risk that the auditor will be unable to detect a material misstatement. Under existing PCAOB standards, the auditor has the same responsibilities with respect to both company specialists and an auditor-engaged specialist, notwithstanding their fundamentally different roles. Company specialists primarily assist in the preparation of the financial statements and are overseen by management, whereas auditor-employed or auditor-engaged specialists are subject to risk-based supervision directly by the audit team. The objective of this proposal is to better reflect how an auditor uses the work of those different type of specialists and to strengthen the requirements for evaluating the work of a company specialist. The final amendments align closely with our risk assessment standards such that an auditor's effort to evaluate the specialist's work is commensurate with the risk of material misstatement. We expect that the changes will direct auditors to devote more attention to the work of a company's specialist and to enhance the coordination between an auditor and the auditor's specialist, whether employed or engaged. These amendments should lead to more uniform practices among audit firms of all sizes. While uniformity is not an end in itself, we expect that greater uniformity in this area will lead to increased audit quality, particularly as it relates to auditing accounting estimates and disclosures when specialists are involved. As with the estimates project, we are adopting these standards only after substantial outreach, including 2 rounds of public comment. Following our close review of the comments received, the final changes reflect a number of revisions to eliminate or revise certain proposed requirements that may have been perceived by commenters as unnecessarily complex or prescriptive. I'll close by thanking the PCAOB staff for their work in bringing this project to completion. We appreciate your significant efforts, and I'm pleased to support both proposals. Board Member Ham.
Thank you, Mr. Chairman. And I'll begin where the chairman just ended. I'd like to thank our terrific staff in the Office of the Chief Auditor for all their hard work bringing before us today these 2 recommendations, which are designed to strengthen our standards for auditing, accounting estimates, and using the work of specialists. I'd also like to acknowledge the efforts of our teams from the Office of Economic and Risk Analysis and the Office of the Chief or the General Counsel for their contributions. I'd like to especially recognize Barbara Vantage, my former senior advisor, who stepped up this May to serve as our acting chief auditor and who has ably guided these 2 long-awaited standard initiatives to this vote here today. Finally, I'd like to express my gratitude to my fellow board members for their generously sharing their insights as we together evaluated these recommendations. The 2 companion releases before us today work hand in hand because auditors often use the work of specialists in auditing certain accounting estimates. Estimates such as values of financial and non-financial assets, allowance for loan losses, and contingent liabilities include some of the most risky areas of the audit because they are so challenging to measure. Increasingly, complex accounting estimates dominate financial reporting frameworks. As a result, estimates have significant effects on companies' reported financial positions and results of operation. They also present heightened risk of management bias given their subjective nature. The estimate standards that we are considering today creates a more uniform, risk-based approach to auditing estimates. And by highlighting the potential for management bias, the standard also reinforces the need to apply professional skepticism when auditing management estimates. Given the complexity of business transaction and financial reporting requirements, including around estimates, auditors and financial statement preparers often require assistance from experts with special skill or knowledge in fields outside of accounting and auditing. Recognizing the increased importance of specialists, the recommended amendments to our standards make 2 types of enhancements. First, the amendments strengthen requirements when auditors assess the work of specialists engaged or employed by the companies being audited. Second, the amendments establish a risk-based supervisory approach for specialists employed or engaged by the auditors themselves. This approach allows auditors to tailor their supervision to the risks presented, as well as the knowledge, skill, and ability of the experts being supervised. Both these topics, auditing estimates and the use of specialists, have long been on the PCAOB's standard-setting agenda. Each topic has been subject to thorough research and analysis. The PCAOB staff has prepared consultative papers and drafted proposed approaches for public comment. Extensive public outreach has occurred. Market participants, audit professionals, investors, and other thought leaders have provided insights. At key junctures, in-depth discussions were held with our standing advisory group, whose membership includes investors, preparers, audit committee members, auditors, and academics. Our staff also consulted with the staff of the Securities and Exchange Commission. And when this new PCAOB board was fully assembled earlier this year, we together immediately took up the mantle on these two standard-setting projects. Through a careful, deliberative process, we assessed the work already done and considered the extensive input previously received. We also asked our staff to reevaluate their previous work on each topic with an eye towards better ensuring any newer revised standards will remain evergreen as the use of emerging technology and data analytics evolve for financial reporting and auditing. I believe each recommendation will improve our standards and drive audit quality forward in pursuit of our mission to protect investors and further the public interest. Based on what we know today, I also believe that each recommendation is sufficiently principles-based and flexible to appropriately accommodate continued innovation around data analytics and emerging technology. As a result, I support the adoption of both.
Board Member Brown.
Thank you, Mr. Chairman. I support today's vote on the adoption of the requirements for auditing accounting estimates, including fair value measurements, as well as amendments to the standards to strengthen requirements for auditors' use of the work of specialists. These are important changes and reflect the board's effort to promote improvements in audit quality. It has been said that determining estimates is both an art and a science. Over the past 2 to 3 decades, there has been a steep increase in the number of subjective accounting estimates that appear in a company's financial statements. Estimates exist in many accounting standards such as fair value, impairment, inventory obsolescence, collectibility, contingent liabilities, accrued expenses, and other accounting areas. In fact, some have described financial statements as estimates upon estimates. Estimates often involve subjective assumptions and judgments and are areas that call for appropriate levels of professional skepticism. At the same time, like all of our standards, auditing estimates must take place in the context of a risk-based approach to the audit. The new requirements take both of these into account. The standards for estimates and specialists will, first, establish a more uniformed, risk-based approach, including emphasizing the application of professional skepticism. And second, strengthen the requirement for evaluating the work for a company specialist while also applying a risk-based supervisory approach to both auditor-employed and auditor-engaged specialists. The final requirement will clarify auditors' responsibilities and better integrate them more closely to the board's foundational risk assessment standards. In developing the standard for estimates, the staff for the first time considered behavioral economics in rulemaking, which, quote, incorporates a more realistic analysis of how people think and behave when making economic decisions. The staff has done an excellent job of studying and considering the potential for cognitive biases that could exist in the context of estimates and factored this into the recommendations we are considering today. In closing, I'd like to thank the staff in the various offices and divisions who worked diligently over the years on these projects and who provided valuable contributions. These projects required tremendous collaboration, and I would like to commend them for that. Specifically, I'd like to thank the following people in the Office of the Chief Auditor. In addition to Barbara, Keith, Dominica, and Lisa, I'd like to thank Nikki Adesoye, Mohamed Salmanoff, David Hardison, and Karen Wiedemann. In addition to Andres, I would like to thank Jun Suk Lee in the Office of Economic and Risk Analysis. I would like to thank Jun Suk Lee and Rashawn Ingot. And in the Office of the General Counsel, I would like to thank John Cook and Jennifer Williams. I would also like to express my appreciation to the staff of the SEC for their significant contributions to these projects, and to my fellow board members for their invaluable thoughts and insights on these matters. Thank you.
Board Member Kaiser.
Thank you, Mr. Chairman. I am pleased we are voting today on two important items on our standard setting agenda. They are consistent with our strategic goal of driving audit quality using a balanced approach that both prevents and detects audit deficiencies for the benefit of investors. Therefore, I fully support their adoption today. The new standard on auditing estimates requires application of a more uniform, risk-based approach. The amendments to the use of the work of specialists strengthens the requirements that apply when auditors use the work of a company specialist and require a supervisor approach to both auditor-employed and auditor-engaged specialists. These standards will be effective for audits of financial statements for fiscal years ending on or after December 15, 2020. The financial reporting ecosystem is currently in the midst of significant change. Preparers and auditors are implementing new and complex accounting and auditing standards to improve the quality of financial reporting and auditing in order to benefit investors. The auditing standard and amendments we adopt today will increase the demands on the financial reporting ecosystem during this dynamic period. Therefore, the board and our staff must ensure we develop a detailed and integrated implementation plan, as well as a robust inspection approach in a short time frame. We also must effectively communicate the plan to all stakeholders. Additionally, we must monitor all aspects of the implementation, including unintended consequences, if any. Consistent with our strategic plan, we must engage to obtain feedback and input on the effectiveness of our implementation approach and plan. Depending on the results of this feedback, the board should be open to making changes, if necessary, to the new and revised standards, including to the effective date. I join the chairman and my fellow board members in thanking the staff who have contributed to these projects. In particular, I would like to thank Barbara Vanich, Acting Chief Auditor, Keith Wilson, Deputy Chief Auditor, Lisa Calangelo, Associate Chief Auditor, Dominika Taraskevich, Assistant Chief Auditor, and our dedicated staff. I would also like to thank the SEC staff for their contribution and support. Thank you, Mr. Chairman.
Thank you. Board Member Desparty.
Yeah, good, good morning, everybody. To avoid undue repetition, I will not give you my complete prepared remarks, but they will be included on the website later today. I, too, fully support the new and amended standards that are before the board today. I believe they set forth very important enhancements to the auditing requirements that will improve audit quality for the benefit of investors by clarifying and strengthening requirements in these often complex and subjective areas of the audit, as you've heard. I think, for example, in the new estimates standard, by bringing together our three existing standards, we will provide clearer and more uniform requirements, which should drive more consistent and higher quality auditing. Of note, as has been highlighted, I think it's important that we all focus on the fact the new standard reinforces the vital importance of the auditor applying professional skepticism in evaluating accounting estimates. And that includes devoting greater attention to considering potential management bias. In this regard, consistent with today's standards, the new standard emphasizes the auditor should consider both corroborating and contradictory audit evidence. At the same time, I think it's important to note that neither today's release nor the existing standards require the auditor to scour the universe to uncover and consider any and all possible contradictory evidence, but rather auditors are required to consider relevant contradictory evidence that is obtained during the course of the audit. With respect to using the work of company specialists, the amendments extend the auditor's responsibility from simply obtaining an understanding of the specialist's work to actually performing procedures to evaluate the appropriateness of the data, significant assumptions, and methods used by the specialist. In other words, the amendments make clear that the auditor should not simply accept a specialist's work at face value. At the same time, I am pleased that the final release is responsive to feedback we received from many commenters. The final amendments reflect a number of clarifying revisions to eliminate or revise certain originally proposed requirements that may have been perceived by auditors, preparers, and other stakeholders as unnecessarily complex or prescriptive. For example, as Lisa mentioned, the final amendments remove the originally proposed word test from the requirements to evaluate the work of the company's specialist, except in relation to company-produced data. The original proposal could have been interpreted as requiring auditors to re-perform the work of a company specialist, which in my view would be an unnecessary and costly duplication of efforts relative to the incremental improvement in audit quality. And today's release makes clear that auditors are not expected to re-perform the work of a company specialist. Echoing some comments that have already been made, I think it is significant that all of the new and amended standards before us today are aligned with the PCAOB's risk assessment standards and are therefore designed to be risk-based and scalable. Rather than prescribe detailed procedures or a one-size-fits-all approach, the new and amended standards allow the auditor discretion in determining the level of testing and required audit evidence that is commensurate with the risk of material misstatement. Accordingly, if implemented thoughtfully, the new requirements are not expected to place unwarranted additional burden on either auditors or preparers, and any additional related procedures and related costs should be proportionate to the corresponding increases in audit quality. Longer term, each of the new standards, we were careful to make sure that we believe each of the new standards is also sufficiently principles-based to accommodate continued advances in the use of data and technology by both preparers and auditors. Finally, I've carefully considered the proposed implementation effective date, which, as you've heard, is for fiscal years ending on or after December 15th, 2020. Given the expected improvements in audit quality upon adoption, it is important, in my view, that the new standards are implemented as expeditiously as reasonably possible. At the same time, I am cognizant that firms require significant time to update methodologies, develop tools, provide staff training, and prepare audit committees and managements for the changes. Upon reflection, I support the proposed 2020 implementation date so that investors benefit from the anticipated improvements in audit quality as soon as practicable. The 2020 effective date also aligns with implementation dates of the new current expected credit loss accounting standard and the new International Auditing Standard on Estimates, ISA 540. I do recognize that adopting the standards will require significant effort. We all realize that, and the PCAOB's Office of the Chairman and senior staff have committed that the Office of the Chief Auditor, the Division of Registration and Inspections, and the Office of Economic Research and Analysis will proactively establish a robust, comprehensive implementation support program to assist firms, both small and large, and other impacted stakeholders. In this regard, a cross-functional working group will be established to engage with stakeholders, monitor progress, issue clarifying guidance as needed, conduct webinars and training, and be available for consultations. In closing, I would like to echo the deep thanks for all of those who have contributed to the development of these new standards, including current and former board members, and thank you, all of you, and also all of our staff, the SEC, the standing and investor advisory groups, and all other parties who participated and provided comments throughout the rulemaking process. In particular, I'd like to recognize our staff in the Office of the Chief Auditor, Barb and her team, the Office of Economic and Risk Analysis, and the Office of General Counsel for their tremendous efforts in bringing these standards to completion. Thank you.
Thank you all very much. And before we move to adoption, I want to reemphasize some of the comments of Board Member Kaiser and Desparty about consistent with our strategic plan. We take very seriously our efforts on engagement and being very closely monitoring an implementation process here. So we will be doing everything we can consistent with that plan. With that said, we will now consider the staff recommendations concurrently. All in favor of approving the recommendations presented before us today, say aye. Aye.
Aye.
Opposed, say no. The ayes appear to have it, and the recommendations are approved. That concludes our agenda for the open meeting today. Thank you all very much for being here. We'll reconvene in 15 minutes, so that's, 10:50 for our closed board meeting. Thank you all very much.